Welcome back. You're still tuned into Markets Today here on CNBC-TV18 to the fourth headline now. Business updates, they continue to pour in today with Tata Steel and JSW Steel rising on positive volume trends. Both stocks closed with gains of 2%. Nigel D'Souza is here with the details.
Well, that's right. Tata Steel has delivered its operational performance for the past quarter. And the India business, that's the one that gives majority of its EBITDA. And that, in fact, has done pretty well. The deliveries are up by close to around 7% on a year-on-year basis, while Europe, as well as a smaller part of the business, Southeast Asia, Thailand predominantly, they have seen a bit of a degrowth. But there are a couple of positives in here. I said the India business, well, the deliveries were up by 7%. Keep in mind that exports, there was still a lid out there. Now, in quarter four itself, we'll see some contribution. But the good news is the domestic volumes were up by close to around 11% in spite of exports seeing a degrowth. Europe, it looks weak, but on a sequential basis, it's up by close to around 5%. So you like that as well. And the management has also said that NINL, which is Nilachal Ispat, well, they're gradually wrapping up and hopefully they get to that targeted 1 million tons on. So that's about Tata Steel. JSW Steel, well, they as well have come up with their update. And the total volumes are up by close to around 17%, coming in on a low base. So that's good news. The India business, India part of the business now, that's done very, very well. That's up by close to around 19%. So you like that. Capacity utilization levels as well have improved from the mid-80s to more than 90%. So on and all, well, with the recent price increases, coking coal costs have cooled off a little bit and the operational performance looks fairly good. Both stocks did well.
Nigel, thank you so much for joining us with all those updates. In fact, Paytm also gained in trade today after its business update for the third quarter. It showed a healthy growth as well. Surbhi is here with all those details. Surbhi.
So their Q3 business updates looks quite strong. Their value of loans disbursed were up 36% sequentially at close to 10,000 crores. Their number of loans disbursed was also up 11% sequentially at close to 1 crores versus 92 lakhs in the previous quarter. The GMV, which is the gross merchandise value, was up 9% sequentially at 3.46 lakh crores. The monthly transacting users, that was also up 6% at 8.5 crores. And the total devices deployed was up 21% at 58 lakhs. Apart from this, over the weekend, the Paytm Payments Bank has received an RBI approval to appoint Sughinder Chawla as its managing director and CEO for 3 years. So all of this is working in the favor of the stock.
Surbhi, thank you so much for joining us with details. Titan and Kalyan Jewellers were also in focus today on the back of their business updates. Manglam Malu is here with the details on what happened with both these companies in the quarter gone by.
Well, it glitters, it is gold, but turns out that some is expensive, some perhaps not. So that's exactly what is playing out in the jewelry sector. If you just take a look at Titan, resilience is what the company has reported this time around. 12% growth in their overall sales, store additions on a consolidated basis at around 111 odd. Let's take a look at their sectors. Jewelry business grew about 11% on a base of 37% growth last year. So that makes a 2-year CAGR of over 23.5%, and quarter on quarter as well, there was a growth of 24%. The company said that sales from studded jewelry actually outpaced the sales of gold jewelry. So that means margins were also better this time around, and they've added 22 new jewelry stores. Other businesses, that was the one that really stood out from Titan this time around. Watches grew by about 14%. Fashion, fragrance, as well as Taneira, which is ethnic wear, both of them grew anywhere between 40 to 150 odd percent. Eyewear grew at around 10%, and Carrot Lane, with a 75% studded ratio, grew at around 50 odd percent. But remember, Titan not particularly cheap. Over 60 times 1 year forward earnings, so as a result of which some profit booking on account of that. But on a much smaller base, Kalyan Jewellers went ahead and reported a revenue growth of 13% on a consolidated basis. Revenue growth for India has been 12%, and non-South markets recorded a much higher revenue growth. Gross margins for them as well grew sequentially, quarter as well as year on year, and they added 5 new Kalyan stores, all 5 of them in the non-South region. So that was one of the triggers for Kalyan Jewellers' growth in outside of their core markets of South India. That stock up 4% as we speak because it trades at a sharp discount to Titan.
All right, Manglam, thank you so much. So that was all about the business updates that we got today for quarter 3. Now on to the 5th headline. Reliance Capital lenders will decide on a second round of e-auction after Torrent Investments and Hinduja Group sought to revise their bids. All 4 suitors may be allowed to bid in round 2 as well. Ritu Singh is here to get us the latest.
That's right. The lenders to Reliance Capital are voting on a proposal to allow a second round of e-auction for the company in a bid to avoid a legal wrangle and also to secure better offers. Now, this, of course, comes after two of the interested suitors, which is Hinduja and Torrent, sought to tweak or revise their bids after the conclusion of the first round of bidding. And we understand that in this round, the base bid could be set at 9,500 crore rupees in net present value terms, which would include a minimum cash component of around 8,000 crore rupees. However, if the second round does happen, it is not just Torrent and Hinduja, but the all four original suitors, they will be allowed to participate, which would include Oaktree as well as the consortium of Piramal and Cosmia. The results of the voting are likely to be declared only later this week. Now, meanwhile, Torrent did move the NCLT seeking a stay on the lender's proposal to conduct another round of e-auction, but Torrent did not get any urgent relief in the matter, and the court will next take up the hearing on the 12th of January. Remember, in the first round, Torrent had emerged as the highest bidder with its offer of 8,640 crore rupees, but Hinduja later revised its bid to 9,000 crores. Torrent had objected to this and gotten an interim stay from NCLT, but the final orders there are still awaited. Torrent also later tweaked its bid without changing the overall figure, offering the entire amount as upfront cash to lenders. So now, if the COC approves the second round of auction and there are no legal hurdles, the entire process will have to start afresh.
Okay, all right. Ritu, thank you so much for bringing us those important details. We'll keep coming back to you as and when there are more updates. But moving on to another CNBC-TV18 exclusive, Voda Idea slid 5% today after sources say that an SBI-led consortium is not in favor of granting additional loans to the company until there is, of course, clarity on government's equity conversion as well. Ritu is back with us. Ritu, give us more details on this one now.
Sonal, it's really a catch-22 situation for Vodafone because on one hand, the government is saying they need some sort of contribution from the promoters in terms of equity to convert the debt into equity and take up stake in the company. And on the other hand, lenders are unwilling to give any more cash or loans to Vodafone unless there's clarity on when the government will eventually convert the debt into equity. So it is a kind of a trap that Vodafone is currently in. It had been knocking on lenders' doors seeking about 7,000 crores in additional loans because it has to repay Indus Towers in various tranches through the year. But at this point of time, it is unlikely that the SBI-led consortium will grant any additional loans at all to Vodafone because they first want to see promoter contribution and they also want to get clarity on government's equity conversion, and also because lenders are worried that this additional loan will only be used to repay the existing debt and not really to invest in fresh business. Lenders also estimate that the immediate requirement for Vodafone Idea to meet its financial dues is upwards of 24,000 crore rupees. So a lot of money is required and they don't really want to throw good money after bad. The total dues, of course, are well over 2.2 lakh crores, which includes the AGR dues. But as of now, for Vodafone Idea, no relief coming in from the lenders at least.
Okay, Ritu, important details there. Thank you so much for joining us. The stock was lower today and ended at a 52-week low as well. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.